All right, so this is another video about option income, option trading, and this is going to be our September results. And I put on here, we made $1,500 selling options while touring Europe on bicycles. So a lot of these trades that I placed in the month of September and August, we were actually in Germany, Switzerland, France, and Austria riding bicycles. And so because of the time change, during the day, I'd be riding bicycles. It'd be middle of the night here. In the evenings, I could actually pop on and check the stock market and was able to trade some options on my phone. And we're going to take a look, see how that went for us. So anyhow, I'll be updating this once a month. This would be September. This is actually, I'm actually sitting in November now, but I went back and went to capture September also to see how we did because I was gone. And I really wasn't sure how much I was making. And in fact, I've been doing this for quite a while, several years, and I have never really kept track. The only thing I would do is if I lost money on a trade, I would know I lost $200 on this trade, or I rolled it forward and knew that I need to make 300 eventually to break even. But anyhow, I start keeping track because the other thing I'd have 3 or 4 or more trades going on at once. I was starting to have trouble keeping track of my head what was going on. So anyhow, I start putting it down on paper or a spreadsheet, and this is what we're going to be doing. And like I like to bore you with every beginning video, subscribe. And this is not financial advice. This is more as a inspiration for people to do something different in life than follow Dave Ramsey for everything you do. So if you think this is entertaining, go ahead and subscribe. So let's go ahead and look at the spreadsheet here. So we have the type of trade. So most of the trades you're going to see are sells. And you could buy an option, but I sell options mostly. I sell them, then I buy them later. If you look at this one here, I closed at 37, but I had sold it at $1.99. The confusing part is I'm selling first and buying it later. So when I say I'm selling a cash secured put or selling a covered calls, I'm doing it backwards. I'm selling first and then I'll buy it later. But the idea is still the same. You buy low, sell high. So in this case, I bought for 37 cents. I sold for $1.99. So now you're thinking, whoopee-doo, you made $1.62. Big deal. You do the options in blocks of 100 shares. So I didn't make $1.62. I made 162. And then I also sold 2 contracts. So I made double that, which was $324. So this first trade, I made $324. So quickly, let's try to make this a little simpler here for a minute. So I'm going to change this to 0 just for a second. So when I sold this for $1.99 per share, the contracts, I'm not selling the stock or the ETF for a certain amount. That's a little bit different. So I'm just talking about the price per share for the contract. Yes, very confusing. So if I would have waited till this expired down to 0, I would make $398. So at the beginning of the trade, I make $398 on day one. And I get to keep that's mine no matter what. That's mine forever. I sold this on the 25th. Remember, I'm selling and then buying later. So I sold it on the 25th, and then the expiration was going to be the 5th. So if I do nothing and it just runs out, it would eventually go to 0, which is good for me. And then if it goes to 0, I have made the 398. What I usually do, I decide I don't want to wait that long and I'll actually buy it early. So basically when it goes to 0, I'm buying it for $0 and sold it for 100 or $1.99. So I'm making the full amount. So I need to change that back to 0.37 because what happened was I went ahead and I sped things up a little bit. I didn't want to wait till the 5th. I sold it for 37 cents. So I had to pay 37 cents a share back. So what would that have been? 74, something like that. When all was said and done, I still made $324. Almost 90% of the time, I close these early. I take my money and run. And one of the reasons why I do that, most of the called price decay, most of that happens the first half of the contract. And then as it gets closer to the expiration date, the amount of money you're making each day decreases. I like to close these early and then use that money, do another cash secured put on something else or the same thing, which, for example, is what I did right here. So I closed this on the 4th. And then at the same time, I saw a new one on the 4th with an expiration date on the 12th of September. And I actually closed this one early on the 9th. So I had the same strike price, 88. When I say I'm paying like $1.49 or $1.99, that's what I'm paying per share for the contract. I'm not actually at this point buying or selling the actual shares of stock. I'm buying a contract saying that I agree to buy the shares of stock at a certain price. And yes, this can be complicated. If you want to understand how to trade cash secured puts, I suggest Googling, looking on YouTube for tutorials on cash secured puts. This is more about how much I made, not how to do it. But anyhow, so I sold these for $1.49. And then on the 9th, I actually bought them for 30 cents a share. And so this time I made $238. And that was over 5 days. And this over here is how much money I'm making per day. First one made $32 a day. The return of capital was 1.84%. So that's 1.84% of the amount I invested on the capital I put up. So you have to put up collateral because in order to say you're going to sell something, you got to have it backed with money. It's called cash secured put. You got to have money securing this. So I made 1.84% on the 17,000 in 10 days, which if you did this over an annual basis, it's 67%. So you look at the next one, made $48 per day, 1.35, and that's a 98% return if I did this once a week for the whole year. So basically I doubled my money in 1 year. But I really don't pay attention to this a whole lot because it varies quite a bit. So anyhow, this one I sold it for $1.49. I bought it later for 30, pocketed 238, and all was good and fine. So same thing, I closed it on the 9th and I turned right around a minute later, sold another cash secured put. This time I have the expiration on the 19th. I think that's correct. And I closed that one early on the 12th. So this one here I sold for $1.40, ended buying it back for 45 cents, paid 190. This one here is a little bit different. This is QQQ. So this is a little bit different. This is not a cash secured put. This is a covered call. So what I did here, I did the opposite. I was going to agree to sell my shares of stock. I already own the shares of stock, and I'm going to agree to sell these at a certain price if it hits that price. And for that agreement, I make some money. So on the 15th, I agreed to sell. I had two contracts. I agreed to sell the shares of stock between now and the 19th for 55 cents per share for the contract. And I closed that early and made $92. So in order to do that, you got to own the shares of stock. So we do own a couple hundred shares of QQQ. So it's $120,000. And some people might be saying, why are you risking selling 120,000? So basically what happens if it gets to $600 QQQ, I have to sell my shares of stock for $600 a share. And at the time, this was probably about 4 or 5% above what the current price was. So basically QQQ would have to go up approximately, how many days was that? 4 days. It would have to go up 4% in 3 days, and things were not gonna that probably is not gonna happen. So basically, over 4 days, I made $23 a day or 7% annual return. So that's peanuts, but it's still $92. Jumping back here on the 12th, if you look here, I closed this on the 12th up here, TQQQ. I sold another cash secured put with the expiration date on the 23rd. I closed this one early on the 22nd. So once again, 2 contracts, $1.08. I sold it for and bought it back for 10 cents. I made 198. And I won't go through every single one of these. You can see what's going on. And then here's something new, SOXL. So this is semiconductors leverage ETF. I I think this might have been the first time I had dabbled with this one. It sells for $26 a share approximately. And just because I was dabbling with this, I bought one contract, sold it for 41 cents per share. I bought it back later for 8 cents a share. And so that made me $33. And so this is how much collateral I got to put up, how much cash I got to have in my account to do this. I had to have $2,600. So basically, for 100 shares of stock at 26 is 2,600. So you got to be able to have the money to buy it. It's not like they take your word for it. It has to be in your account. And as long as this trade is active, you can't spend that money. You can't do nothing with it. But you're still earning 4% interest on it in the brokerage account. So it's better than a CD. So instead of having the money sit in a CD, you might as well be using it for something, right? So TNA is another leverage ETF on the Russell 2000. So I sold a cash secured put for 63, bought it back for 12. Let's say how many days later. This can't be right. This was probably on the 19th. Let me fix that right now. So that's a mistake. And then the TNA down here, because what I did, I closed out on the 19th and I turned right around and I did it again on the 19th. And this one was probably the 29th. So it looks better. But anyhow, I won't go through all these, but you can see where I would sell something and then I'd buy it back later. So the black line here is the cutoff for September. These are things that closed in September. I was trying to decide how to do this. I opened other things of September. So September was still happening here. I was still selling things, but these are the ones I closed in September. So basically, I'm going to say this is how much I made in September. And if I highlight these here, down here, you can see the sum of $1,547. We made $1,547 basically while on vacation, riding our bikes around. We came back around the middle of September sometimes, maybe around the 19th or so. I can't remember exactly when I got back, but we were gone for about a month and was doing these while in hotel rooms, riding our bikes on vacation. So if you are able to, this is not advice, but if a person was able to come up with $50,000, let's say, and put it into a brokerage account, you can earn 4% on that. Think of it as 50,000 in a CD, basically the same. So while that 50,000 is sitting there doing nothing, it's earning 4%, you could do something like this on top of it and make a little bit extra money. Now, these trades I'm making, the chances of actually being assigned and having to buy the stock, I'm really cautious on that. So I usually keep to where it's probably less than 20%, but closer to 10% chance that it might happen. And if you flip that around, there's an 80 to 90% chance that I don't have to buy the stock. Now, if I do have to buy the stock or sell the stock, and a call, I would have to sell the stock. A put, I would have to buy the stock. Like I said, only about a 10% chance that would happen. If it does happen, I'm setting the price at such a spot that it's going to be probably a really good deal. And if it hits that price, chances are it's going to turn around and go the other direction and I'm gonna be happy that I bought it, let's say cash secured put. If the price of TQQQ went to 88, I'm probably gonna be very glad I could buy for 88 because today TQQQ is selling for $116 a share. So what is that, $30 more than 88? So if I would have got stuck buying these for 88, I would be at $30 more per share. So how much is $30 times 200? That's quite a bit of money. So if I would have got stuck buying, I would have been just fine. But anyhow, this is something that some people say, "Why just not buy TQQQ and hang on to it?" Because TQQQ goes up and down. And what I'm doing, I'm catching the ups and the downs and the dips all along the way. So that's why. But anyhow, that is it for this video. Like I said, $1,547 basically while on vacation. And we'll be doing another video for October. So make sure you pay attention and keep your eyeballs open for that.